Hello, everybody. Adam Bergman here, tax attorney and founder of IRA Financial. And on today's video, solo 401k contribution deadline rules for 2023. Yeah, we're in 2024, but the good news is there's still so much opportunity to not only set up a plan for the 2023 year in 2024, but make contributions to a new or existing solo 401k plan in 2024 for the 2023 taxable year. And the best of news is you actually can get a $500 tax credit simply by setting up a 401k. So essentially, this tax credit will be good for the next few years. The IRS is essentially paying you to set up a solo 401k plan. And it's a special auto enrollment credit that probably should have only be eligible for 401ks with non-owner employees, but there was kind of a error in the drafting, you could argue, of Secure Act 2.0, which was passed the end of 2022, signed into law by President Biden. And the auto enrollment credit actually works for any type of plan, even a solo 401k plan. So it is a windfall because you can set up a solo plan and get a $500 tax credit by simply having an auto enrollment credit, an auto enrollment option. We'll do that for you, and you get a $500 tax credit. Tax credit is way stronger than a deduction. Why? Because it reduces your tax liability dollar for dollar. So if you owe $5,000 in taxes to the IRS, you then owe $4,500. Okay, whereas the deduction just reduces your taxable income, okay, or the income subject to tax. The credit will reduce dollar for dollar the actual amount you owe Uncle Sam. So credits are far more valuable than deductions, and the IRS is giving everyone who sets up a solo 401k $500 tax credit to do that. So just keep that in mind. So let's go through today's presentation. Probably about 30 or so minutes. I know it's tax season, and if you're watching this live, you probably have a lot going on. So I don't want to take up too much of your time. And I think in the next 30 or so minutes, I'm going to be able to give you everything you need to know from a information standpoint on what you need to know for a solo 401k setup and contribution deadline rules. So they're actually not very complicated. They're a lot of fun. There's a lot of strategies and opportunities. So buckle up. It's going to be a lot of fun. You know me. I've written 8 books on solo Ks. There's 3 of them. Can't fit all 8 of them here. I don't want to show off, but I've written 2 specific books on solo 401ks. Here's actually one of them right now. Solo 401k in a nutshell. And I basically love what I do. So hopefully I can help, educate some of you and explain the benefits and power of the U.S. retirement system. And I'll go through some examples at the end to show why the solo 401k is such a powerful retirement vehicle and also an investment vehicle, because you can do a self-directed solo plan. You can do alternative assets like real estate and generate tax-free income. So let me start off by saying I would put every single one of my 25,000 clients in a solo 401k if I could. Why don't I? Because not everyone's self-employed. And we'll go through the eligibility requirements in a moment. But you essentially need to have a U.S. business and no full-time employees other than the owners or their spouses. And a full-time employee is someone who works more than 1,000 hours a year, 3 consecutive years of 500 hours or more. Okay, so if you work full-time at Apple and you have no side gig, you don't, maybe you do some consulting or sell widgets on eBay or some other website. If all you do is work 9 to 5 at Apple and you go home and you relax and you don't have any side gig, that's great. God bless you. You're just not going to be able to set up a solo K. Okay, so you need a side gig, generally a Schedule E. If you have a Schedule C, if you have a Schedule E for real estate, you can move some of that income to Schedule C. C as in Charlie, you would pay some self-employment, Social Security tax when you go E to C, but the benefits of being C is that you can contribute that business income, at least the net amount, into a solo 401k. So solo plans were created in 1974 by ERISA, just like IRAs. Not all solo 401ks are the same. You can get a free plan of Fidelity, but you're not going to be able to do alternative asset investments. You won't get a $50,000 loan feature. You're not going to be able to do the mega backdoor, and you're not going to have full control. 2001, the EGTRA, the Economic Growth, Tax Relief, and Reconciliation Act, gave the solo 401k plan a lot more powers. It offered employee deferrals. Prior to 2001, it was just a pure profit sharing plan like a SEP IRA. EGTRA came along and gave the employee deferrals, the Roth options, loan feature, and it turned it into I think, the most powerful self-employed retirement plan out there. And I mentioned self-directed options. Okay, eligibility, I went through this real quick. You got to have a business and no full-time employees other than the owners or their spouses. So why would you want to set up a solo? High contribution limitation. So in 2024, you can do 69,000 if you're under 50 or 76,500 if you're over 50. And there's two components, right? There's the employee deferral, which allows you to go dollar for dollar, 23,000 if you're under 50, 30,500 if you're over 50. That could be in pre-tax or Roth. And then there's the employer profit sharing contribution that lets you go 20% if you're net Schedule C, if you're a sole proprietor or a single member LLC, or 25% if you're a guaranteed payment partnership recipient, or if you receive a W-2 from a C or S Corp. And when you add the 20 or 25% bucket with the employee deferral, that 23,000 or 30,500 bucket, you can't go above the 69 or 76.5. And I'll explain in today's podcast, but also in more depth in later podcasts, why if you use the mega backdoor Roth, which allows you to go dollar for dollar Roth 69K, you can then, if you have the opportunity to have multiple plans, let's say you work full-time at Apple and you put in 20K there, you can then, if you have a side business and have sufficient income, you can do a mega backdoor of 69K and supercharge your contributions for the year. So these are the reasons why you can get checkbook control. As I mentioned, not all solo 401ks are the same. I talked about the mega backdoor. And you get great asset and creditor protection. I just saw today O.J. Simpson died. Just thinking about O.J. Simpson, the reason he moved from California to Florida is because his biggest asset was his 401k, right? There's obviously huge personal civil judgments against him, but they couldn't touch his 401k. If he stayed in California, the asset and creditor protections on his 401k are much more limited. It's essentially up to a judge to determine what he needs from his lifestyle. Whereas Florida, it's pretty much guaranteed protected. So 401k is generally a better asset and credit protection from most states if you are outside of bankruptcy. And if you do go bankrupt under the 2005 Federal Bankruptcy Act, it's generally unlimited protection for those states that are opted into that plan, that act. So just some better asset and credit protection. So deadline for setting up a solo K. So this is important. Okay. So let's say you don't have a solo 401k today. You're watching the video. You're like, oh, holy cow, I can get a $500 tax credit for just setting up this plan. If you are a sole proprietor or single member LLC, as long as you set up the solo plan before you file your tax return, before you file your 1040, which is either April 15th or October 15th, okay, you can set up a solo 423, not just 24, 423 and do employee deferrals and profit sharing, okay? So you can literally set up a solo K up to October 15, 2024 and do 66K or 73.5 if you're over 50. Those are the maximum contributions for 2023. And you can do them all the way up to October 15, 2024, so long as you filed for extension. If you plan on filing your tax return April 15th, you still have a couple days to set up a solo K. We all know taxes always due April 15th for individually, right? Like even if you take an extension, you still have to pay your taxes in full April 15th. If you don't, you're going to be subject to interest and penalties. So you can get an extension to buy yourself some time to actually go through and file your return, but you still got to pay the taxes by April 15th. So I just want to make sure that's clear. I got a lot of questions about that where people assume you can just take an extension and defer paying your taxes to October 15th, but that is not the case. So remember that. Okay. Now let's say you're a partnership, 1065, right? You got multiple partners. You can do, okay, a 2023 solo 401k up until you file your partnership return, which was March 15th, plus extension September 15th. So hopefully you're still on extension for your partnership return for 23. So you still have time if you're a partnership, because remember, you can still set up a solo 401k if it's 2 or more partners, so long as you have no non-owner employees other than your spouses. So if it's me and my buddy, we have an accounting firm, architecture firm, law firm, whatever, and we have no full-time employees who work more than 1,000 hours or 3 consecutive years of 500 hours or more, just us, maybe our spouses work with us, then we can still set up a solo K, even though we're not an individual, right? A solo K can be set up by any business. Sole proprietor, single member LLC, multiple member LLC, corp, C corp, S corp, even a not-for-profit, okay? So again, partnership, you have March 15th, and you have until October 15th. Now, the one difference is with a partnership, the employee deferrals, since it's a guaranteed payment, they should have been made by 12/31/2023. So if you still want to set up a solo K for your partnership and you're in 2024, all you'll be able to do is either profit sharing of 25% of your guaranteed payment amount, plus you can also do the mega backdoor. Okay, so that is still an option. That can go all the way up until you file your return, and that is $66K for 2023. There's really no catch up for the mega backdoor. All you can do is the 66, but you can still, if you have extra profit sharing or extra employee deferrals, you could tap that up a little bit, but you still have time. Now, C Corp, you have until April 15th or October 15th. C Corp, S Corps, and partnerships, you can still set up your plan in 2024, but all you're going to be able to do is profit sharing or mega backdoor, which is again the 66K, because the employee deferral, which is the 22.5 or the 30,000 if you're over 50 for 2023, that should have been made by 12/31. The profit sharing could be made until you file your return. Compare and contrast that to a sole proprietor or single member LLC. In that case, only in those two instances, thanks to the Secure Act 2.0, you can now do employee deferrals and profit sharing up until you file your return. So even if you're in 2024, you can still do the combination of employee deferrals, the profit sharing, and the mega backdoor for the 23 in 24. If you have a partnership, a C Corp, or an S Corp, the employee deferrals should have been made by 12/31/2023 for the 23 taxable year. You can still set up a plan, but all you're going to be able to do is profit share. Okay, so let's talk about contributions, right? I talked about this. I'm going to break this down per contributions, right? So just to go through the numbers again, 2023, you can do 22,500 or 30,000 if you're over 50. Then there's a 20% bucket or the 25% bucket if you're a partnership, C Corp, or S Corp. And when you put it all together, you can't go above 66 or 73.5. So let's say you made 100K, sole proprietor, 2023, under 50. You can do 22.5 plus 20% of 100 or 40. You can do 22.5 plus the 20K or 42.5. If you were over 50, you can do 30,000 plus 20% of 100 or 50. If you are, let's say you made 100K, S corporation, over 50, you can do 30,000 plus 25% of 100, giving you 55,000. Okay, so if you made 200K, you just do the math, right? You'd be able to do, let's say you're S corp over 50, you'd be able to do 30K plus 25% of 200, and that's going to give you more than 73.5, so you'd be capped at the 73.5. Okay, so it's just a simple calculator. We have it on our website. If you're our client, we can work the numbers with you. It's not really difficult. You just obviously can't contribute more than you earn, and then you have to look at employee deferrals, profit sharing, or you can just do the mega backdoor, dollar for dollar. Talked about the mega backdoor. You can still do it for 23 up until you file your return for 2024. You can go up to 66K. There's no catch up. And the nice thing about it, as I mentioned, you can aggregate those contributions with other employee deferrals you make to other plans. So the easiest example is you work for Apple. Let's say you're under 50. You put away $22,500 in the Apple 401k plan, 2023. But you also had a side gig, right? You were an IT consultant. Let's say you made $80,000, right? You did some IT consulting on the side. You're a pretty smart person. And you're watching the video and you're like, oh my God, I love Ross. And holy cow, I don't really need all that money. I'm doing pretty well. I thought that once I maxed out to the Apple plan, couldn't really do anything else. But no, now Adam's telling me that I can set up a solo K for my IT side gig. It could be a sole proprietor, single member LLC, C Corp, S Corp, whatever. I can set it up. I can do the profit sharing. I can't do the employee deferral. Once you max out the employee deferral, the 22.5 or the 30K in 2023, that's it. The employee deferral is not per plan. It's per individual. Okay, so once you hit the max on the employee deferral, you're done. The profit sharing is per plan. So you probably aren't getting profit sharing in Apple, but if you did, you can also do profit sharing for your side gig. And then the mega backdoor, obviously, is per plan too. So Apple, you did your employee deferral. You did 80K. You can do 66K dollar for dollar, okay, in Roth. And if you had some room, depending on your income, you could do some profit sharing maybe. The 20% of 80 would be too much, right? 66 plus 16 would be a little bit too much, but maybe you do $10,000 profit sharing, pre-tax or Roth. So if you want more deductions, you can do the employee deferral with Apple pre-tax, the 22.5 or 30K for 2023. Then you can do a little bit profit sharing in your side gig, get another deduction, and then whatever's left over, put it all in your Roth dollar for dollar in the mega backdoor and let that money ride, right? Because we all remember what I've said for many, many, many years and many, many, many videos. The retirement system's rigged in our favor. It's based off the power of compounding returns. The longer you save, the more consistent, the more money you put away. And I'm going to go through examples in a few minutes, the more money you're going to have. It's simple math. Albert Einstein coined deferral, the eighth wonder of the world. Compounded returns is the best way to take advantage of that process. And the U.S. retirement system is really the best way to take advantage of compounded returns. So the mega backdoor, I wish I could do it. I can't do it in the IRA Financial plan. We don't have enough plan participants doing it. We'd fail the top heavy test. But if you're a sole proprietor or you have a solo K, you don't have to run any of those tests because it's just you. So you really don't have to worry about that. So now let's just kind of review. I kind of talked about this in terms of when to set up a plan, but let's go through it business by business, entity type by entity type, when you need to make your solo 401k contributions. Okay, let's start with a sole proprietor, single member LLC. I mentioned this. You can set up a plan for 23 up until April 15th or October 15th. If you have a plan already that you set up in prior years, that's amazing. You can do your contributions, employee deferral, and profit sharing just before either April 15th, maximum latest date October 15th with extension. Okay. The mega backdoor you can also do all the way up until April 15th or October 15th. Partnership, I mentioned the employee deferrals had to be done for 2023 by 12/31. So that is done. The profit sharing you can do all the way up until March 15th or September 15th with extension. And the mega backdoor, same way, March 15th, September 15th. And again, that's dollar for dollar. I put April 15th. That should be March 15th. That's my bad. C or S Corp. The C or S Corp should be done by March. So if it's an S Corp, it's March 15th. Okay. Again, I should have broken this down. That's bad. I'm going to update this PDF and make sure when we post it, it's accurate, because for a partnership, it's March 15th and September 15th. For the S Corp, it's March 15th and September 15th. For the C Corp, it's April 15th and October 15th. Okay. And the mega backdoor follows the same rules. If you do employee deferrals, the 22.5 or the 30K, that must be done, or should have been done by December 31, 2023. So that ship has sailed. You can still do profit sharing. Let me just review it and just for clarity purposes, say it again. S Corp, it's March 15th, September 15th. C Corp, April 15th, October 15th. That's for the profit sharing, and that's also for mega backdoor. The employee deferrals, just like the partnership, that should have been done by 12/31/2023. So you can still set up a plan. You can only do profit sharing or mega backdoor. If you already have a plan, that's amazing. You hopefully have made your employee deferrals by 12/31. Profit sharing for an S Corp, March 15th, September 15th. C Corp, April 15th, October 15th. Every year matters. Power of deferral, compound returns. Rule 72. If you get a 9% rate of return, every 8 years your money doubles. Keep your good habits. 401k contributions matter. Let's go through some examples. This is my favorite part. Okay, so bear with me. Let's say you made 100K. Okay, let's say you're 30 years old. And let's say you're going to put away $10,000 a year in your solo K from age 30 to 72. That's 42 years. Okay, so I'm assuming you have a business and you have the ability to put away. You're not maxing out, right? The max out we know is 69K or 76.5 if you're over 50. The employee deferral max out for 2023 is 22.5. For 2024 is 23. So I'm saying here, 10K a year from 30 to 72, assuming a 9% rate of return, you'd have almost $5.5 million tax-free if you did a Roth at age 72. So let's say instead of 30, you start at 35, okay? You'd have $3.52 million. Okay, instead of $10,000, let's say you did $7,000, okay, from 35 to 72, okay? You'd have $2.7 million, a 9% rate of return. Let's say you started at age 40, did $7,000 a year, 40 to 72, 9% rate of return, $1.7 million. Okay, so the beauty of the solo K is you can make up for lost time quickly because you can put away high contributions, right? Let's say you're 40 and you put away $20,000. Okay, 9% rate of return, almost $4 million at age 72. So the point is, the solo 401k is so powerful. Why? You can put away a lot of money, pre-tax or Roth. There's a loan feature, lets you borrow $50,000 or 50% in account value, whatever's less. You could checkbook control it, right? You're the trustee of the plan. You have control to do stocks. You can also do alts like real estate, private business investment, hedge fund, venture capital fund, private equity fund, gold, cryptos, whatever you want, essentially, except two things. Can't buy collectibles like art, and you can't do any transaction that involves your 401k and a disqualified person. So you can't do anything that directly or indirectly personally benefits you, your lineal descendants, your parents, your children, your spouse, daughter-in-law, son-in-law, or any entities controlled by such persons, right? You can't buy a house and live in it. You can't take your 401k, buy yourself a Porsche, take your 401k, buy yourself an Apple Watch, right? Whatever you do has to be done to exclusively benefit the retirement account. So hopefully these examples, incentivize people that, hey, I can get a tax credit, $500 tax credit. I can still set up a 401k plan for 2023 in the 2024 taxable year. There's still plenty of time. Even if you haven't filed an extension, you still have time if you're a sole proprietor, single member LLC. If you're filing an extension, whether you're a C Corp, S Corp, partnership, sole proprietor, single member LLC, you still have time to set up a 401k for the 23 taxable year. Not only just for 24 benefited, this can benefit you and get a tax credit for 23. You can also get a tax credit for 24. Just need to let us know you want to opt into the auto enrollment feature and you will get that $500 tax credit. It's literally a no-brainer. I mean, the IRS is literally knocking us over the head and saying, hey, dummies, please set up a 401k and get rich. You know, the retirement system is not a zero-sum game. As I mentioned, we all could be tax-free millionaires. And let me give you another example. Let's say you're 45 years old. You're watching this video. You're like, oh my God, I've never saved for retirement. I've just been too busy. And you want to put away, let's say, $13,000 a year, 13%. Okay, of 100K, simple, lucky 13. You'll still have $1.7 million. Okay, 45 to 72. If you did $15,000, okay, almost 2 million. So you can make up for lost time. It's not too late. Let's say you're 50 years old. You're watching this video saying, oh my God, I still can do this. And let's say you put away $15K a year from 50 to 72. You'll have 1.18 million. Let's say you can go 20,000 a year. Okay, you're making some money, or 50 to 72, 1.5 million. So clearly starting early is better than starting late, but at least starting is better than never starting. Being patient is paramount. Trusting the process is part of the secret sauce. You just need to let your money work for you. You can't worry about anything. Just trust the math. Okay. I always tell people the best thing you can do is teach your kids after they graduate college. Like my dad always told me, I was a lawyer in New York. I was making good money. This is my first real job. And he's like, you're going to spend money. You want to go out, have fun, meet girls, party. Great. Just max out your 401k every year. If you max out your 401k every year, you're going to be rich. Even if you're young and you're spending money, and at that point, student loans weren't crazy. This was a long time ago. School wasn't as expensive as today. It was cheaper to live. We didn't have any inflation like today. You can actually buy Starbucks coffee for like $2. Beer was like $5, $6. So being single and going out every night, I still had some money to play with. Rent wasn't that crazy, even in New York City. And I just maxed out my 401k every year. And I can tell you, I'm not going to disclose what I have, but I've literally maxed out my 401k every year since 2001. So we're in 2024. It's 23 years. You can run the math. Obviously, 20 something years ago, the max I think was like 15 or so, or 16K, whatever it was. But I always tell people, life is expensive. It's fast. It comes at you hard. Just if you can't max out a 401k, max out an IRA. Okay, it's better than nothing, right? Like if you watch the video I did yesterday, it was the IRA contribution rules. If you're watching this on tape, check out that video. It gives you the basics about contribution deadlines for IRAs, Roth, SEP, simple. And I did the same process I'm doing right now for 401k contributions. Did it with IRAs, and the numbers were smaller. Why? Because the IRA limitation for 23 is just $6,500 or $7,500 if you're over 50. So obviously you put in less, you're just going to have less at the end of the day. The beauty of the solo K is it lets you make up for lost time, or just lets you supercharge your return. So let's do some crazy examples, right? 28 years old, you're going to put away 20K to 72, 9% rate of return. You're going to have $11.6 million. Okay. Now, this stuff isn't crazy. Like, I have friends that are a lot of people I know are able to save $20,000 a year, and they're going to do this for the rest of their life, and they're going to have tens of millions of dollars. I see it in my IRA business. I see it in the IRA client base. I have many, many clients with $1 million plus IRAs, and every year they keep growing. Why? They keep putting in money. They keep making investments. And that's why the IRA totals are $13 trillion. There's 65 million IRAs, $13 trillion. The overall whole retirement system is $33 trillion. That keeps going up. Even if markets drop, yes, values will drop somewhat. But if you're doing alts and you're still contributing, you're going to increase your values. And over time, if you look at the S&P 500, the last 100 years, it averages over 10% rate of return annually. So I'm using a 9% rate of return. It's not aggressive. It's probably reasonable. Let's say I go to 8%, okay? More conservative. In that number, I'll have 8.5 million, okay? So yeah, being a good investor helps, no doubt. But just 8% over the next 44 years, anyone could do it. If you literally just park your money in the S&P 500 and don't even have it a financial advisor, don't do any alternative assets, don't do exotic investments, just put your money in the S&P 500. History tells us over the next 44 years, you'll do better than 8%, probably around 9+%. Okay. Yeah, some years will dip, some years will go up. It's going to average around 10%. So these numbers don't lie. It's just math. And unfortunately, not enough people see this. And I always tell people the solo K, if you just haven't had a chance to save, it's fine. It's not too late. Let's say let's go crazy here. Let's say you're 60 and you're watching this video and you're like, Adam, what do I do? I'm 60 years old. I think I can put away 20K from now to 72. Okay. You'll have 485K. If you put away 20K a year from age 60 to 72, 12 years, you'll have 485,000. It's not 4.8 million, but that 485 will help you when you're paying your bills and you want to go on vacation and got some extra firepower in your bank account that will help you in your golden years. So something's better than nothing. Trust me. Okay. I've seen it with clients who've told me, Adam, I wish I watched your videos 15, 20 years ago. I wish I talked to you 30 years ago. Like, I would have millions of dollars. I'm so stupid. I just started saving 5 years ago. I'm doing great on my investments. I just don't have enough time. I'm in my 60s. Like, I should have had millions of dollars and I'll have hundreds of thousands. So please, 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 if you are watching this and you're young, in your 20s, your 30s, your 40s, your 50s, because even 50s are young, right? Example, you're 50 and putting in 20K a year, 50 to 72, 9% rate of return, you'll have $1.5 million at 72. That's good. Okay, 1.5 million, even with inflation, is still money, right? In the 1980s, if someone was a millionaire, they were rich. If you have $1 million today, you're still rich. Okay, yeah, we have inflation. $1 million in the bank helps. Maybe you can't buy a mansion. It helps, right? It's still 80 to 100K cash flow a year on your money. Okay, it helps. It pays your mortgage. It lets you go on vacation. It really helps. Everyone could use 80 to 100K free money a year. So all that matters. So it's not too late. You get a tax credit for doing it. You still can set up the plan in 24 for 23. Still tons of opportunities to benefit from the solo K. So let me just go through a few questions since I reached the 30-minute mark. That's kind of what I'm trying to keep it at. Okay, Chris, you got a bunch of questions. So listen, good practice in 990T is if you have UBIT, it only gets triggered of over $1,000. What's UBIT, unrelated business income tax, triggered in 3 instances. Use a loan, a non-recourse loan to acquire an asset like stock. Use a non-recourse loan to acquire real estate in an IRA. There's exemptions for 401k plans. And you invest in an active trader business like a restaurant through a pass-through entity like an LLC, not a C Corp. C Corps will not trigger UBIT. It'll block it. So if you have not more than $1,000, Chris, you can file the 990T. Best practice is to file it, lock in the losses so you can offset them for future gains. You don't have to, as long as you keep track of them. You can use them going forward. I think it's the best practice to file. I was told someone at IRA Financial, if you do an IRA to 401k rollover, you can keep your IRA accounts open. Yeah, it's just good practice. Again, why? Because if you ever want to move money back from the 401k to the IRA, you have the account open. If you're over 59 and a half, you can move money between IRAs and 401ks anytime you want without a triggering event. So you may just want an IRA open for whatever reason, bifurcate investments. It's your call. You do whatever you want. No right or wrong. If I roll over an IRA into a solo K, does the UBIT disappear? Yeah, if you acquired real estate with leverage and you move it from an IRA to 401k, going forward, once the loan, once that transaction is now in the 401k's name, not the IRA's, yeah, there is an exemption that applies to 401ks. You may have to prorata during the year, depending on when you make the transition, but yeah, you should be exempted. Yeah, OJ, rest easy knowing his wife's killer is dead. Yeah, it would have been nice if OJ just came clean and said, hey, I'm sorry, I screwed up. Like, it's my bad before he died, but I doubt he'll do that. So anyways, it's crazy. I was talking to a friend about OJ. I was in New York City. I literally remember this chase, like 1994, like yesterday. Hard to believe it's so long, 30 years ago. It's crazy. Can't believe it. But yeah, I guess karma, just catches up to all of us. Okay, Bob. As an independent contractor, I receive compensation and a 1099 from a company for recruiting customers for their business. I'm the only person involved. See next paragraph. How much of my projected 15K compensation am I eligible to contribute to my solo K? So basically, you have to take out some Social Security and FICA. It's generally around 15%, but depending on how much Social Security you've paid on other sources, it could be reduced. But we have a calculator on our website. So I will post it if I can find it. And you can simply just run the numbers very easily. Here, I'm going to post it in the chat. Okay. So you can easily check it out. Here it is. So you can just run the numbers. Okay. There it is. So that's your answer. I can't do better on the calculator. It's smarter than me. Okay, next question. Early retirement is my goal, but there doesn't seem to be a whole lot of clearly worthwhile info out there on that. Well, I think there's a lot of great information. I think this video is a great start. This solo 401k will give you the power to retire early, right? I gave you the numbers. Let's go through some numbers, right? I talked about this. The numbers don't lie. Let's go back to my calculator. Okay, let's say you want to retire early. Let's say you're 30 and you want to retire at, I don't know, 60. That's pretty early. Okay. If you put away, it's like 12,000. I don't know. Let's see. What's fair? If you put away $20,000 from 30 to 60, okay, you'll have $3.28 million at 60 years old, assuming a 9% rate of return. Okay. So that's the start, right? What you need to do. Let's say you only want to put in $12,000 a year from 30 to 60. You'll have 2.1 million. Let's say you can start at, instead of 30, you can start at 27. $12,000 a year, 27 to 60, 2.8 million. So you can retire early. The solo plan will let you do it because you need money to retire early, right? Obviously, you probably want a hobby or something to do, but most people need money to retire early. I personally are going to continue working my whole life because I love it. I'm going to stay at some point. Even if someone offers me $10 billion for IRA Financial, I'm going to keep doing what I'm doing. That's what I love to do. And it's not about the money. So I know what my passion is. But let's say your passion is playing the piano or painting, then yeah, you want to figure out a way to retire early. If you are self-employed, that's your golden ticket. You know, you can get health insurance now, and you can also have the most powerful retirement plan. The Solo K will allow you to save more than if you work for Apple or Google, right? Because Apple or Google won't give you the mega backdoor. It's not going to give you the profit sharing of 20 or 25%. It's going to let you do employee deferral and maybe a 4 to 5% match on that. Whereas the profit sharing will let you go 20 or 25%, and then you can do the rest with the mega backdoor. So you should be able, if you have the capacity to save and you have the extra cash flow, you should be able to save 20,000 plus for a lot of years. And that money will help, based off compounded returns, will help you retire early. Okay, John, does it make sense to set up a Solo K for a tiny income? Say 10,200, aside from using mega backdoor. Yeah, listen, every dollar counts, John, right? Like let's run some numbers. Let's say you put away $8,000 a year from 30 to 72, right? Assuming a 9% rate of return. John, that's $4.6 million. Every dollar matters. Let's say instead of 8,000, you put in 6,000 a year, 30 to 72, 3.8 million. So as I mentioned, 3 principles: start early, be consistent, trust the process. Okay. We all can be 7-figure rich at 70. I wrote a book about that. It's the truth. Okay. Power of 72, 9% rate of return, your money doubles every 8 years. Okay. That's it. So yes, every dollar matters. Even let's say you do $3,000 extra, 30 to 72. It's $1.9 million, John. If I gave you $1.9 million tax-free in a Roth right now, you wouldn't take it? Yeah, you would. So start early, be consistent, trust the process. No one is teaching people this. I feel like I'm the only one doing this, and I should have 10,000 people watching this video. I literally can make 10,000 people millionaires if they just watch this video. But I don't know. It's not as sexy. You know, my kids are on TikTok all day, watching, stupid videos. So I guess that's what I should be doing. I'm not a very good dancer, and this is what I love to do. I'm just a tax nerd. So that's what God gave me. Okay. If I have a real estate company, S Corp, I get a 1099 from property management company. Can I participate in a mega backdoor? Yeah, of course you can. Set up a solo 401k for that 1099 income and supercharge that return. If it's 10K, 20K, you can dump most of it. It's all Roth into that plan. Keep doing that. You'll be a tax-free millionaire before you know it. For better framing of my early retirement. Okay. Have been saving for 10 years, have 25K, my annual expenses, trying to figure out if that's enough. Well, I don't know. I mean, we'd have to talk about it. Listen, it's about your income, what you need to live, what you want to do, right? There's a lot of people that have money that could retire. They just aren't because they have crazy expenses. They got 2 homes. They have kids in private school. So even if they make 600 grand a year, they're barely above water. And I have friends that make a lot less money that live better lives because they have less expenses. So Your expenses are good. 25K of annual expenses. God, that's amazing. I don't know what you've saved. Hopefully you've saved for 10 years. So hopefully you've done well and keep saving. I don't know how old you are either. Yeah, there's a lot of info about bots. I write all my blogs. I've had a lot of people come to me and say, why don't we just do ChatGPT to write the blogs? And I'm like, no, I think you can tell it's bots that write it. There's no personal touch. Some of the articles are pretty good, honestly, that these bots have done, but you can ultimately tell they're done by bots. And there's always that human element that's missing that kind of ties in the article with the question, right? So some of the facts are right, some of the numbers, but the analysis is never good. That's the difference. So, these chat bots, yeah, they can go through the code and give you, like, I have a lot of lawyers. I hate when lawyers do this. I was typing with a lawyer today, asking a question, not related to IRAs, obviously. It was like a real estate related question. And this lawyer sends me a provision in the code. I was like, I can read the code. Give me your analysis. That's why I'm paying you. So that's what the chatbots can't do. Generative AI, at some point, if they can do that, then we're all in deep trouble, because I don't think there's anything else for us to do. If chat GPT bots could analyze situations and based off their ability to capture information and repository all the information, we're not going to be able to compete. But they can't analyze. They don't have the human brain, the human element. So until that happens, I'm not worried. That's it. Yeah, we did 40 minutes on contribution deadlines. I will update this. It will be posted. And again, it's not too late to set up a solo K for 23. You got time. If it's just a quick recap, sole proprietor, single member LLC, you have until April 15th, October 15th. If you're a partnership, and you have until March 15th or September 15th. S Corp, March 15th, September 15th. C Corp, April 15th, October 15th. If you have a plan for already in 23, great. You can do employee deferrals for a sole proprietor, single member LLC up until you file your tax return in 24 for 23. If you are a partnership, C Corp or S Corp, you basically have had to do the employee deferrals already by the end of 23, but the profit sharing, the mega backdoor can be done until you file your return in 24 for the 23 taxable year. That should sum this all up for you. Thank you so much for watching. I hope you enjoyed today's video. If you have questions, comments, please leave them. Love to hear from all of you, and I look forward to seeing everyone again next week. Next week's video is going to be how we can all learn from the greatest self-directed IRA investor in the world. To be secret who that is, but he's a billionaire, and I've talked about him a bunch and some hints, and he has given us the roadmap, how literally in the right circumstances, we all can have tax-free millions by just investing in a Roth IRA the right way. So I'm going to kind of go through that solution, kind of go through the path, the keys, and give you all the tools you need to emulate that strategy. That's it for me today. Have a great day, and thanks so much for watching. Definitely let your friends, family know. I mean, I'm literally giving people the keys to the kingdom here. I will have millions of dollars in my retirement account. So will my wife when we're retired. My friends will. Anyone out there that wants to have millions of dollars in their retirement account, I'm literally telling you how to do it. Just watch these videos. Just 30 minutes. That's it. Just care. You don't even have to set up an IRA with IRA Financial or a solo K. Go to Schwab, Fidelity, just open an IRA, put in the S&P 500. I don't care. I just want people to have money. It's not a zero-sum game. We all can be rich. Just start, be consistent, trust the process. It's guaranteed. It's guaranteed. It's guaranteed. It's based off math. It's so stupid that more people don't do this. It drives me crazy that, there's whatever many people on these videos, there should be 10,000 people watching this every day, because I literally can make everyone millionaires by just listening. So if you have friends, just tell them to watch it. It's the best thing you can do. It's free. Literally spend 30 minutes, watch this stuff. And it takes time. It's not a get rich quick thing, right? Anything worthwhile in life, if you've ever started a business, you're an entrepreneur, A great business doesn't start in a day, in a week. It takes years, okay? 5, 10, 15, 20 years. It will come. The money will come. Just be patient. Don't worry. Trust the process. You will be rich, okay? I've seen it with my family. I've seen it with me, my wife. I've seen it with my clients, okay? We all can do this, all of us. And if we don't want to rely on our government to pay us to live, like Social Security, we need to do this. We need to take control of our future. I'm not relying on whether it's a Democrat in power or Republican. I don't care. Social Security, if I get it, great. It's just extra spending money. But God forbid I need that to live. Oh my God. I think that would not be a good situation. And we all have something to do about it. Yes, the retirement system was created in 1974. So for some folks that were born, in the 30s or 40s, they missed out. But for anyone that's in their 20s, 30s, 40s, or 50s, no excuses anymore, or 60s, no excuses. We all can do this. We all can be millionaires at retirement. The solo plan is the best, quickest way to get there. If you can't fit into a solo, everyone could do an IRA. Everyone could do an IRA. No more excuses. So hope you guys enjoyed it. Thanks for watching. See everyone again next week. Ciao.